Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for gold. So gold versus the price of the dollar. The date is July 12th, 2020, 9:17 a.m. Eastern Time. If you want to stay up to date with all of our trading videos, make sure you click that red subscribe button. Okay, so you can see my sentiment is bullish. I've been bullish on gold here for a bit. We are now testing the highs from 2011, so the best prices we've seen in 10 years. Me currently am waiting to make sure this week's candle closes above 1775. So let's talk about why I said that. I'll go ahead and zoom in. Let's go all the way back here to 2011, 2012. We can see these weekly candles would attempt to break through. They'd kind of quickly poke through the 1800, 1775 mark, right, into this upper zone. That's when we saw gold test 1925. We can see once, twice, three times prices, I guess for lack of a better word, we'll say flirted with resistance. Okay, sell-off. Now let's shoot ahead 10 years. Here we see prices last week close above the 1775 mark with a very bullish candle. Well, not very bullish. It's a bit of a doji spiral top, meaning I'm concerned that this week's buy, if this week's candle buy closes below 1775, then it's really just the same as we saw all the way back here 10 years ago. And then essentially what I've done is bought the top, and you never want to buy the top, just like you never want to sell the bottom. Okay. So now this is a very bullish trend. So let's go ahead and look at the daily. So I need this trend to continue and prices to hold. It doesn't even need to go up more. It just needs to hold above 1775. So let's look at the short-term trend that's been building since 2019. We'll call this our recent term. So here we can see our big trend channels, right? Oh yeah, also one thing I wanted to point out is we're approaching the top of this trend channel. So what does that mean? So see here, the ultimate lows, right? We get the lows of this uptrend. Price rolled below this line, then above it. You can see price touching it several times, while every trend has a parallel. And we can see the parallel is in fact here. Price touched it in 2011. You can see price rode on top of this channel. Support held, before eventually falling out of this trend channel back into here. So an ideal bullish case would be price would move into this bullish channel, and then we could test 2000. So here's again though, it's another reason I'm not so sure about buying just yet, because in my eyes we're at the top of the trend channel. Okay, so here's our short term. Now what we can do is we can make a parallel of this big to get what's this more small term, short term frame of mind about trading. We're going to draw a parallel channel. And this will break our channel into equidistant zones, and we can see this works out pretty well. All right, let's see. Actually, I'm going to say it's right here. We can see this, in fact, represents the top half of the trend channel, and price has come up and touched it a number of times and then moved away, which qualifies me right now. Right, price for years was in the bottom channel, came up, pushed up, is now in the very top. So once again, price could come up here. I'm also okay with the scenario if price does this. Let's take this dead middle line and run this up. If price comes down and sits on the 1680 above the 1650 median trend channel, okay, still bullish, right? Because even if price were to come back down here, it's just waiting for the big buildup, and then it's going to be even better support. The only thing I don't like about this is this trend face angle is super steep. It needs to broaden out. So if prices come over here, fall over to 1650 and broaden out, even better, buy more. It's more sustainable. We've got plenty of support around 1500. So Anyways, that's this week's take on gold. I hope you all have a great week trading, make lots of profits, and we'll talk soon.